Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the development and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine economy is expected to post lackluster growth in the second half amid a global slowdown. The Bureau of Immigration moves to strengthen border security to block the entry of illegal aliens. And U.S. President Donald Trump threatens economic sanctions against Russia over its war in Ukraine. All that and more coming up. Let's take a look at how global markets moved overnight. U.S. stocks rose, lifted by Nvidia and Eli Lilly, even as President Donald Trump's firing of a Federal Reserve governor stirred concerns over the central bank's independence. Nvidia advanced ahead of its Wednesday earnings report, seen as a key driver for AI stocks amid ongoing U.S.-China trade tensions. Trump announced late Monday that he was removing Fed Governor Lisa Cook over alleged mortgage loan improprieties, fanning worries of political pressure on the Fed.
What we've had under Fed Chairman Powell is a number of compliance and trading issues that occurred a couple of years back. And so it showed a lack of oversight, in my view. Now we have a situation where, if true, it's a pretty serious error of omission to try to claim two primary residents. We don't know if it's true. And so I guess I would say that if it is true, I think the president is within his rights, but it would seem to me even better if the Fed chairman would step up or Lisa Cook would take herself out of the mix, because this is distracting to the markets.
The Dow Jones Industrial Average rose 0.3%, the S&P 500 higher by 0.4%, and the Nasdaq higher by 0.4% as well. Over in Europe, markets closed lower. The FTSE 100 in the UK down by 0.6%, Germany's DAX lower by 0.5%, and France's CAC 40 down sharply, down by 1.7%. The Philippine economy is expected to post lackluster growth in the second half of the year. BMI, a Fitch Solutions company, says spillover effects from the global slowdown will weigh on growth. The economy is projected to expand by 5.4% in 2025, below the government's 5.5 to 6.5% target. With U.S. President Donald Trump's tariffs set to intensify in the latter half of the year, BMI warns global conditions could worsen. This may hurt investment inflows and dampen private consumption in the Philippines. Economists say the big question now is whether lower interest rates at home can offset these global headwinds. The Philippines may face new tariffs after U.S. President Donald Trump renewed threats against countries taxing American tech firms. In a post on Truth Social, Trump warned that nations with digital taxes could face substantial additional tariffs on their exports to the U.S. unless those measures are scrapped. Ateneo Center for Economic Research and Development Director Percival Peña-Reyes says the Philippines could be hit as it imposes a 12% value-added tax on digital services. Republic Act 12023 applies the levy to non-resident providers like Netflix, Amazon, and Google, a move meant to level the playing field with local platforms. The risk now is whether this digital tax designed to boost fair competition becomes a new flashpoint in trade relations with the United States. The government successfully borrows billions of pesos through treasury bills. The Bureau of the Treasury raised the 25 billion pesos as planned at Tuesday's auction, with bids reaching 113.02 billion pesos, more than 4 times oversubscribed. This was slightly lower than the 113.75 billion pesos in tenders last seen August 18th. Yields dropped across all tenors, reflecting strong demand as investors position ahead of a widely expected Bangko Sentral rate cut this week. The strong appetite highlights growing confidence in government securities, but also shows how liquidity is shifting towards safer assets, even as the economy waits for policy easing to revive growth. 9 business groups are watching closely how the rules of the Konektadong Pinoy law will be crafted, calling them crucial to helping local firms compete globally. The joint foreign chambers of the Philippines, the European Union, ASEAN Business Council, the Information Technology and Business Process Association of the Philippines, and the U.S. ASEAN Business Council hail the law as a landmark move to boost internet access and digital competitiveness. But they warn its success will depend on rules that ensure the free flow of data across borders. For the business community, the measure is seen as a test case, whether the Philippines can turn policy reform into real competitive advantage in the digital economy. Developing economies like the Philippines still face some of the highest trade barriers in importing clean technologies. The Asian Development Bank, in its key indicators for Asia and the Pacific 2025, reported that average tariffs on green products hit 7.3% in low-income countries in 2022, compared to just 1.4% in high-income nations. The Manila-based lender says stronger trade facilitation is needed to improve access to green technologies in developing economies. A multi-billion peso car scandal is now under the spotlight. An investigation is underway to determine whether the luxury cars owned by the Vizcaya couple were smuggled or underdeclared, with potential sanctions estimated at up to 3 billion pesos. Sujin Kim has the full story.
Penalties could soar up to 6 times for illegally imported luxury vehicles, a looming sanction if fraud is proven in the case of the Vizcaya couple's fleet of 40 high-end cars. Bentley, Maybach, and Rolls-Royce. These are just some of the ultra-luxury models owned by the Vizcaya family, with an estimated value of $500 million pesos. If these cars entered the country illegally or were underdeclared, penalties could reach as much as 3 billion pesos. But how is this determined, and what questions must be answered? First, were the cars legally imported or smuggled?
We're in the process of verifying which, identifying the vehicles that are named under them. And the first step is, of course, to go to the Land Transportation Office, because what we've seen in the videos are mere models of these cars.
If legally imported, all papers must be complete, declarations accurate, and taxes fully paid.
So if you're buying a 15 million peso luxury vehicle, most likely you'll get the same amount that you're going to pay, in terms of both duties, taxes that are due to that particular vehicle.
If smuggled, authorities could suspect dummy importers, underdeclaration, or tax evasion. The BOC says the investigation may take 15 to 30 days.
So it takes a little bit more time for that. But if they're not able to produce any of the financial documents that we will be asking of them, then we can also make a conclusion based on the records that the Bureau of Customs have.
If violations are confirmed, civil and criminal liabilities will apply, including sanctions under the Customs Modernization and Tariff Act.
So there may be a penalty for imprisonment that's accompanying these violations, especially if they're tainted with fraud. In terms of civil liability, again, if it's tainted with fraud, we do impose a penalty of whatever it is, whatever findings that you may have in terms of deficiency of duties and taxes, to up to about 600%. So 6 times of the amount that we will be able to establish as been lost to the government can be imposed against these companies.
Customs also has the power to levy or restrain the Vizcaya properties until civil obligations are settled. On the question of fraud, if underdeclaration falls between 1% and 30%, penalties still apply, but it is not automatically fraud.
There's a presumption that beyond 30% fraud already exists. The 30% threshold is merely to establish the presumption of fraud.
The Bureau of Customs is now working closely with the BIR, LTO, and AMLAC to trace the cars, verify fund sources, and determine whether all taxes were properly paid. Sujin Kim, Bilyonaryo News Channel.
As Customs zeroes in on the legality of the luxury car imports, the Bureau of Internal Revenue is now probing the money trail, asking if the funds were legally sourced and if the right taxes were paid. Sujin Kim returns with this report.
The directive is clear. The BIR has ordered a tax fraud audit on contractors involved in anomalous flood control projects, including the company linked to Curly and Sarah Discaya. Under Revenue Regulation 17/2024, all contractors are required to secure an updated tax clearance before they can receive final payment for government contracts. Failure to comply can result in immediate payment suspension and a tax lien on the contract amount. According to a tax expert,
it's not unusual for rich people to buy luxury cars, but it is unusual to buy a lot of luxury cars simply because of it's not it's impractical to be paying so much taxes for all this. As we're talking about contractors who are enjoying or flaunting their lavish lifestyle. So if they're paying taxes, then there's no problem. But it has to come from BIR.
the key questions for the BIR was the money declared in the income tax return. What was the source of funds? If from government contracts, were these properly documented and subjected to 12% VAT and income tax? According to Abrea, contractors often cheat through the underdeclaration of income.
From being smuggled or legally imported, it becomes now a source for tax evasion if it results to more than 30%. And in this case, based on practice, and it's like an open secret, we know everyone is talking about it, that more than 30% is really paid as under the table or share of different parties.
Floating expenses include fake receipts or luxury purchases written off to shrink taxable income. In some cases, even luxury cars are declared as business-related expenses.
And the BIR can audit and investigate whether these are normal business expenses or necessary for their operations. I don't think they need 20 luxury cars to operate as a contractor or so on and so forth.
Abrea insists that lifestyle checks should be automatic for any individual or company engaging in government contracts.
Because it's part of the due diligence that the government should only be transacting with honest taxpayers or honest companies.
His recommendation, make the status of investigations publicly available on the BIR website.
Because if you recall the Farmali case, it's a huge case. We talk about billions during COVID. But after the investigation, no tax evasion case was filed. And we hope that they can revive it because, tax evasion doesn't die like that. They have 10 years to audit.
He also suggested to lift bank secrecy.
Because it's really hard to catch the culprit if we cannot access their bank accounts. In the Philippines, there's bank secrecy, which protects those who are hiding their ill-gotten wealth or these illegal transactions or income.
Abrea stressed the need to pursue not just private citizens, but also government contractors and political figures. He warned that failure to act decisively could undermine public trust and weaken tax collection. Soojin Kim, Bilyonaryo News Channel.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most, your bottom line. The Bangko Sentral ng Pilipinas is set to cut rates again this Thursday, tomorrow, even as inflation sits at a 6-year low and growth remains stuck at about 5.5%. The question now is, will cheaper money be enough to jumpstart the economy? Joining us now is Jonathan Ravelas, a senior advisor at Reyes Tacandong and Company. Hi, Jonas. Good morning, and thanks for being here with us.
Good morning, Maiki. Good morning to your listeners.
Okay, let's start with two of the headlines from earlier in the newscast. Number one, BMI, a unit of Fitch Solutions, says that they expect the Philippine economy to post lackluster growth in the second half. Specifically, they expect growth for full year 2025 to expand by 5.4%, well below the government's 5.5 to 6.5% target. What are your thoughts on this, Jonas?
Well, basically, I guess the key factor really is all about the uncertainty of the tariff. This has actually, created a lot of businesses to stay on the sidelines as they wait for the impact of this to our economy. At the same time, you have to remember we battled inflation, and pure and simple. the man on the street does not feel it in his wallet when you talk about growth.
Correct. When we talk about GDP growth, our GDP growth, it's often cited as one of the fastest in Southeast Asia, second only to Vietnam. But why does this oftentimes feel like just a paper win? Growth on the charts, but it's not always felt on the ground.
Well, basically, I guess one is that it's not trickling down to everybody. Unlike what we saw probably pre-pandemic, that people were seen to travel, consumer spending was at its peak at that time, and at the moment we're not seeing the growth to really filter down. So it's certain areas, particularly those that are just like a little bit of consumer that is actually moving, but the rest, they're feeling the hit.
This also has to do with the government's capacity to spend pre-pandemic and post-pandemic. And when we talk about this, let's talk about it in the context of debt to GDP ratios pre-pandemic and today. Pre-pandemic, we had a debt to GDP ratio of about 39%. And now, to put things into context, this administration, the Marcos administration, inherited a debt to GDP ratio of roughly 62% in 2022. And recent developments, they show that government's outstanding debt continued to breach records in Q2 of this year. Right now, we're at a 20-year high of 63.1%. The DOF's target was 61% by the end of the year. We're already above that. What does this tell you, Jonas?
Basically, I guess we understand that, we are trying to recover just after the pandemic, and inflation eventually bit us in 2022. And we have to do two things. Given the present situation, we're doing fiscal consolidation. We continue to invest in what we really need, which is infrastructure, and at the same time, hold off certain spending. However, given this battle in inflation, we've seen a lot of government subsidies that is needed to bring down inflation. So these are the challenges that the government faces today. And that also means the government has a lot of balancing act. And that's the reason why you're seeing a sort of lackluster growth.
From an investor's perspective, does the disconnect between strong headline inflation and weak consumer sentiment make the Philippines harder to sell as an investment story?
Oh, definitely, because it's not really trickling down. I guess when you think about growth, you want it as inclusive. That means the biggest part of your economy, which is consumer spending or consumption, should actually be robust. But what we're seeing right now is that people are still managing their budgets because they still see prices quite high, and it remains fragile enough at this point in time.
Jonas, what would you say is the reputation of the Philippines as an investment destination today? 3 years into this administration, have you seen any meaningful shifts, for better or for worse?
Well, basically, I think the Philippines is still a good story. It's just that there are a lot of headwinds at this point in time. We have a robust consumption economy, which is domestic, so we should be immune from all of this. But because we import a lot, that poses the risk. Our shift in trying to make our economy good is because of ATM, agriculture, tourism, and manufacturing, which are slowly gaining traction. It's just that, I guess, on the manufacturing, it's just a question of further infrastructure spending that's much needed. And over the past year, we've seen the challenges for climate resilient infrastructures, especially due to the flooding.
Yeah. Jonas, on that note, you mentioned infrastructure and flooding. The president called out corruption in nearly 10,000 flood control projects since 2022. How does this cloud of infrastructure affect risk premiums investors assign to the Philippines? And do you think if not the government, then who? If not the government, then the private sector. Do you think PPPs will help us change that narrative?
Oh, definitely. That would provide transparency, and at least, people will become more confident with the PPP. And of course, right now, people are looking for accountability, audit trails, so that confidence could be restored, and that initially, while we're trying to figure it out, maybe the PPP will take that portion of that spending. So hopefully that kicks in, so that slowly, people will look at it as an opportunity to heal on the corruption side and focus on something that's more transparent.
Yeah, all right. Let's talk about interest rates. Tomorrow, the BSP's Monetary Board is going to be meeting to talk about interest rates. Expectations are for a 25 bp cut, baby steps, this tomorrow, and then for another one by the end of the year. Given that we had one rate cut in the first half and we're looking at two this second half, do you expect momentum to pick up this second half?
Well, in a way, yes. You have to understand that policy cuts, the transmission of this takes around 6 to 9 months. So it's not as immediate. But you have to understand, last year, we've cut by 75 basis points. And this is actually what could help, bring positiveness in the second half of the year. Given the present prognosis for inflation of probably hitting 1.5 on the average for 2025, that could actually, seal the additional 25 basis points probably in October.
Yeah. Okay, let's talk about inflation in relation to that. Headline inflation is at 0.9%, and core inflation is at 2.3%, levels we haven't seen in years. How sustainable is this downtrend, especially given all the external headwinds?
Okay, at the moment, we can probably say that it appears manageable, but again, it's still fragile given the fact that you have potential secondary inflationary effects from tariffication, and at the same time, potential currency volatility, which could create some effect. And you also have to think about the renewed geopolitical tensions that is happening in the Middle East. So that could contribute to higher oil prices. So at the moment, we can probably say that, for 2025, 1.5% most likely in the bag. But moving forward to 2026, we can probably see it slightly hitting back towards the 2 to 4% range of the central bank, within the two.
Okay, going back to interest rates in relation to inflation, the Fed is expected to cut interest rates in September. This is going to give us more room to cut interest rates. The BSP has been in an easing cycle since 2024. 2 more rate cuts baked into the cake. We already expect that. But moving forward, what's next? Are we still in the middle of this easing cycle with the Fed poised to cut rates in September? How much room does the BSP have to bring down rates further, and what's your outlook for interest rates for 2026?
Well, basically, I think for 2026, most likely we still have, with the Fed cutting by 50 basis points this year, most likely we could afford to cut further to around close to 4%. But I think on a conservative, we're looking at 4 to probably 4.25%. For 2020.
And what does that signal for equities and bonds moving forward, Jonas?
Well, basically, I guess when it comes to looking at short-term rates, this will definitely mean positive for businesses. This will give them leg room to, for expansion plans, and eventually for consumers, this should provide a little bit of leeway to their budget. Especially when they pay their loans, housing loans. So this should at least provide cushion. But I guess in the direction of interest rates, given the fact that, government is still expected to borrow for the 2026 budget, and it continues to rise, the challenge really is long-term rates could still rise further.
Yeah, talking about government borrowings, the government successfully borrowed billions of pesos through T-bills. Just yesterday, the Bureau of Treasury raised 25 billion as planned at Tuesday's auction. This was more than 4 times oversubscribed. So the government is taking advantage of the liquidity at present now, even ahead of the rate cuts. What are your thoughts on this situation, Jonas?
Well, basically, the demand for the treasury bills continue to highlight, despite the fact that we're expecting the BSP and the Fed to cut policy rates. It means that the strong demand for T-bills is that people are still expecting that long-term rates will rise. So what they're doing is basically staying on the short term and waiting for the rates to adjust. Then that's the time they lock in long-term investments.
Yeah, their liquidity is shifting towards safer haven assets, given all the uncertainties as well. Jonas, what's happening at the boardrooms, at the management level? What are companies doing in this type of environment? Can you help us understand what people are doing?
Well, given the set of uncertainties, some companies would tend to, concentrate on their core expertise, and we've seen this in the past year or so. Some companies adjusting their strategies, like the Ayalas, selling their utilities and just concentrating on their banking and real estate. That's one. The other thing is that they're also trying to build their war chest. They're analyzing their projects over the medium term and making sure that they're properly funded, and at the same time looking at risks. So it's really about adaptability to the current environment.
And from your vantage point and deal pipeline, Jonas, what's the biggest signal of where business confidence is today, given this changing environment and how everybody has to adapt to it?
Well, basically, I think at this point in time, it's really all about building liquidity at this time. Because once one good indicator is that if the middle class starts spending, that could be the beginning or a sign that, the growth that, initially we were talking about is lackluster, is slowly gaining momentum. So especially when we're now in the middle of the cycle of the accommodative policy, then definitely, probably towards the end of the second half, we have lesser uncertainties on Trump's tariffs. We hope that they're finished, and then we can move forward.
And lastly, Jonas, what's one piece of advice you can give to investors right now as they navigate today's environment?
Well, basically, I guess the one thing that they shouldn't do is not to invest. They should take advantage of the present market volatility to look into companies that provide good dividends and that are favorable in the medium term. And these are sectors such as food, retail, and real estate. And of course, you have to include infrastructure.
Of course. All right. Jonas, thank you so much for your time this morning. That was Jonas Rivela, Senior Advisor at Reyes Takandong.
Thank you, Maiki.
We're taking a short break. Business 360 will be right back. Welcome back. Let's check on how Asian markets are moving this Wednesday morning. Right now, I'm seeing a mixed picture. The Nikkei 225 is in the green, higher by 0.2%. Hong Kong's Hang Seng Index higher by 0.3%. Shanghai's Composite flat with a slight upward bias, up by a little less than 0.1%. And Singapore's Straits Times Index going the other way, down by 1%. Here at home, Philippine shares plunged Tuesday. The benchmark index sank to a 4-month low as investors brace for the Bangko Central's policy decision this week while worrying over new U.S. tariff threats. The PSCI tumbled 136 points, or by 2.2%, to close at 61.45, its weakest finish since April 21st. Market sentiment turned sour after U.S. President Donald Trump warned of heavy tariffs on China's rare earth exports and new duties targeting countries imposing digital taxes. Trading was active with net value turnover at 13.28 billion pesos, while foreign investors pulled out 2.04 billion pesos. Market watchers say all eyes are now on the Bangko Sentral ng Pilipinas with a third straight 25 basis point cut widely expected this week. Over the near term, analysts see volatility continuing as investors weigh lower rates against global trade risks, with policy relief providing some support, but not enough yet to spark a sustained rally. Checking on the PSE index right now, as of 10:40, the main gauge is in positive territory, bouncing back from yesterday's losses, up by 1.2% in early trade, up sharply to 62.18. The broader all shares index is in the green as well, up by 0.8% to 37.15. As for the sub-indices, we're looking at a mixed picture. The financials, property, services, and mining and oil counters are in the green, while the industrial and holding firms are limiting the market's advance, but not by much. Total volume is at 196 million shares traded, valued at 1.63 billion pesos. Market breadth is bullish. We've got 79 advancers, 66 decliners, and 37 stocks unchanged. Taking a look at the currency markets, the peso opens at 56.93 to the dollar, stronger than its previous close of 57.07. The Philippines is making a bid to become Asia's next digital hub, with President Ferdinand Marcos Jr. using the Manila Tech Summit 2025 to rally regulators and banks to turn technology into an engine of inclusive growth. Yujin Kim filed this report.
Filipino fintech apps are now being primed to go global as industry leaders in Malacanang position digital finance as the catalyst for the Philippines' push toward a $1 trillion economy by 2033.
We have two unicorns in the Philippines. No, you have GCash, which is a $5 billion company in terms of market valuation. You have Maya, which is now close to $2 billion in valuation. Of course, our aspiration is to have more unicorns.
At the Manila Tech Summit 2025, President Ferdinand Marcos Jr. said the country cannot be a mere observer as technology redefines markets, backing an industry plan to lift digital access and harden defenses against scams, online gambling, and cyber attacks.
For Filipinos, digital technology means shorter queues, faster transactions. It means ease in paying bills, renewing licenses, and accessing government services. It also means that our farmers can register their products online. Teachers can access digital tools. Entrepreneurs can sell to larger markets. In other words, technology allows more opportunities to reach every Filipino.
The headline commitment, 80% of adults with digital transactional accounts and 80% of retail payments done digitally by 2028. Founding Chair Lito Villanueva said the drive will be enforced through an industry-led fraud bureau, an eKYC registry, and a zero-tolerance policy against misuse of payment platforms for illegal transactions. He adds the Philippines has already surpassed its own 235 fintech count target in the Philippine Development Plan, ahead of schedule by 2 years. The economic baseline, Malacanang reported a 2.25 trillion peso digital economy in 2024, 8.5% of GDP, supporting with more than half of payments already digital. The policy task is to scale that share while closing connectivity gaps and keeping investor trust intact.
That will really mean so much for the Filipinos, especially in geographically isolated and disadvantaged areas, given the fact that still quite a number of remote communities, especially in the provinces, in the island barangays, still do not have that access to affordable and accessible and reliable data connectivity.
Is through network
BSP
effects.
Governor Eli Remolona Jr. said open finance pilots, simple retirement products like Pera, and regulator-led digital currency tests are designed to keep the system relevant and safe.
At the BSP, we like to keep things simple. We like smart innovations that solve real problems. We like simple solutions that people can easily use. And we like secure systems that can withstand shocks
and attacks. This is how we connect inclusion, security, and innovation.
On infrastructure, the administration flagged the national fiber backbone due by 2028 and the national ID system to streamline KYC, alongside the e-commerce bureau and SIM registration to deter online fraud. The government also noted actions to curb in-app gambling access on payment platforms to protect consumers and the financial system. Soojin Kim, Bilyonaryo News Channel.
Transportation Secretary Vince Dizon is teaming up with ride-hailing app Grab to develop more affordable and efficient mobility options for Filipinos. This is part of President Ferdinand Marcos Jr.'s directive to create a more commuter-friendly environment. Secretary Dizon visited Grab's headquarters in Singapore, where he was presented a system designed to carry more passengers through a carpool or ride-sharing setup. The system will feature multiple pickup points and drop-offs for passengers heading to similar destinations. The carpool scheme will be piloted in the Philippines before the end of 2025, with services offered at key locations during peak hours. Grab says the program will have guaranteed departures to maximize car capacity and help ease road congestion. Border security is getting a new layer of defense. The Bureau of Immigration is partnering with the National Intelligence Coordinating Agency to strengthen border security. The move aims to prevent the entry of undesirable aliens into the country. Immigration Commissioner Joel Anthony Viado says they will maximize every piece of intelligence to protect the Filipino people and safeguard the integrity of our country's borders. The Bangko Sentral ng Pilipinas is studying new rules to address risks from e-gambling. The central bank warns that the proliferation of illegal gambling sites could jeopardize the country's efforts to stay off the Financial Action Task Force, or FATF, gray list. The BSP has also ordered e-wallet providers to take out in-app gambling features. The FATF removed the Philippines from its gray list last February after more than 3 years under tighter monitoring. The next assessment is set for 2027. There's currently no law barring government officials and employees from engaging in online or land-based casino gambling outside office hours, according to the Civil Service Commission. At a budget briefing, CSC chairperson Marlene Barua-Yap explains that an executive order only bans government personnel from entering gambling establishments during working hours. She notes that the challenge of regulating legal gambling, since officials can freely enter licensed casinos as long as it's outside of office time. PAGCOR reported a 32% jump in online gambling revenue this year, with projections of up to 62 billion pesos unless a total ban is imposed. Barua-Yap suggests legislation may be needed to impose a comprehensive ban on online gambling for government employees. Hong Kong is making a strong bid to attract Filipino business leaders, positioning itself as a gateway for trade, investment, and technology expansion into China and beyond. Officials are also touting a proposed double taxation avoidance agreement that they say could open new doors for Filipino companies looking to expand into Hong Kong. Soojin Kim returns with this report.
Hong Kong is making a strong pitch to Filipino businessmen and conglomerates. At the Manila Tech Summit, the Hong Kong Government Department for Foreign Direct Investments, or InvestHK officials, highlighted the territory's role as the Philippines' fifth largest trading partner, handling nearly a third of China-Philippines' trade through its ports. Negotiations are underway for a double taxation avoidance agreement, with the second round of talks set in October. Once sealed, the deal is expected to remove duplicate tax burdens and lower barriers for Filipino companies expanding into Hong Kong.
You will just pay to the maximum in one way. I understand that for some countries that do not have a double taxation agreement with Hong Kong, they may need to file tax here and also file tax in the area that they make profits. But with this agreement, then there will be a cap for both sides and they will not be paying excess.
Beyond trade, Hong Kong is touting its competitive business climate, Zero tariffs on most goods, a simple tax system with rates as low as 8.25% for small firms, and no capital controls. These growing partnerships are central as the countries navigate a more volatile global trade environment.
Despite the strange things going on in the world about tariffs and all that, it actually has made Asia gel together closer because we are determined to maintain a good relationship. We follow WTO. We want to focus on collaborative, as low barrier trade as possible. As a bloc, we are stronger together, right? So that we want to be able to assist each other and do more two-way trade flow, but also as a conduit.
Officials also stress the territory's global financial muscle, with a market cap nearing $5 trillion and a leading IPO market that attracts companies from as far as Saudi Arabia and Kazakhstan. Hong Kong is particularly wooing the Philippines' growing tech sector, encouraging startups and scale-ups to tap its venture capital network, stock exchange, and family office ecosystem.
We want them to make money. We want them to make a name of themselves outside of Philippines as well.
PCCI's Brian Ang adds the Philippines can also provide a steady supply of skilled professionals in IT, healthcare, and finance. And beyond financial services, 4 sectors are being prioritized for cross-border partnerships, including artificial intelligence, biotech, advanced materials and manufacturing, and fintech. Soojin Kim, Bilyonaryo News Channel.
U.S. President Donald Trump warns he is prepared to impose new economic sanctions on Russia if Vladimir Putin fails to agree to a ceasefire in Ukraine. Russia continues to demand that Ukraine cede territory in 2 eastern regions, a condition Kiev refuses to accept. Analysts estimate that more than 1 million soldiers on both sides have been killed since Russia launched its invasion in 2022.
No, I'd like it to stop. I want to get it to stop. And it will not be a world war, but it will be an economic war. And an economic war is going to be bad. And it's going to be bad for Russia, and I don't want that. Now, I have to also see, because not everybody, Zelensky's not exactly innocent either, okay? It takes 2 people to tango.
Still on Trump, he's calling for the death penalty in homicide cases in Washington, D.C. Trump has declared an emergency and deployed hundreds of National Guard troops and federal law enforcement officers in the nation's capital, citing what he describes as an unacceptable level of violent street crime. But city officials have rejected that claim. Trump has also threatened to expand the crackdown to other cities, including Chicago.
It'll be a crime-free city. By the way, speaking of that, anybody murders something in the Capitol, capital punishment, capital punishment. If somebody kills somebody in the Capitol, Washington, D.C., we're going to be seeking the death penalty. And that's a very strong preventative. And everybody that's heard it agrees with it. I don't know if we're ready for it in this country, but where you have it, it is, we have no choice.
Back here at home, Judy Araneta Roxas, the mother of former Interior Secretary Mar Roxas and widow of former Senator Jerry Roxas, has passed away at the age of 92. She's remembered for her commitment to family, her work with charitable foundations, and her support for a family long engaged in public service. Let's hear her story from Ivy Reyes.
A mother, philanthropist, and public servant. This is Judy Araneta, born on July 13, 1933 to Esther Bustamante and real estate developer J. Amado Araneta. Judith eventually tied a knot with late Senator Gerardo Jerry Roxas in 1955 and gave birth to Maria, Mar, and Dingoy. An advocate of social development, Judy was vice chair of the Araneta Group, which owns the prominent Araneta complex in Quezon City. She was also president of the non-governmental organization J. Amado Araneta, where she focused on education and culture and the arts. Judy also led the Jerry Roxas Foundation and continued what her late husband started. As former Senator Mar Roxas' mother, Judy was also a figure in Philippine politics. Her devotion to family is apparent in Mar's wife, Corina Sanchez Roxas' social media posts. Corina maintains her gratitude and respect for whom she had always called her idol mom. Judy passed on at the age of 92, but her memories remain alive and well in her family, the organization she headed, and the lives she touched. Ivy Reyes, Bilyonaryo News Channel.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.